equity armor fund. All right, Joe, let's talk about the first trade on your list today. You're taking a look at Nvidia. Nvidia's made quite the recovery since April. It's one of the members of the Mag 7 that has done well, not the top of the list, but where do you see it going from here?
Yeah, thanks for having me, Diane. It's good to be here. NVIDIA has just had a tremendous run. A lot of tech stocks specifically have had a tremendous run since April. Coming into it today, it'd be difficult to look at the prices right here and say, hey, I just want to run out and buy it. But I'm bullish on for the next couple of years for a lot of tech. I think we're still in the middle stages of this AI build-out boom. So I got three names here which are going to be describing my bullishness. And for NVIDIA specifically, yes, we all know they're the leaders right now in the AI chips, but it's not just about the silicon, it's about their whole chip ecosystem. They're building this out. Their design is their secret sauce. Their developers are top notch. They have a massive advantage here, just way ahead of the rest of their competitors here. And while AMD and the rest of the world is trying to catch up, NVIDIA still has a big advantage, and I don't think that's going to slow down anytime soon. So just looking at this here, yes, we've had a great run here. I'm actually looking all three of these names. I'm doing what I call a poor man's covered call. Going to be able to be in these names via optionality. You're going to buy a December 2025 call, sell a December 2026 call. You can see NVIDIA having a little bit of a pullback today. Good reason to not be just buying that name outright, because you can see big volatility after these big up moves here for some of these names. So that's what I'm looking at here. Just getting in the name, getting some exposure versus optionality, looking for the run up through 2026, maybe some consolidation after that.
I like the way you phrased it in your notes. The AI trade isn't just heating up, it's scorching. These companies that you have on your list at the heart of it might see a summer cool down, but the long-term trend heating up.
Following a steep decline early this year, Nvidia's stock is now back in the market's favor. When China's DeepSeek chatbot was released, investors were anxious about the company's future despite management's assurances. They were also apprehensive about the effects of new tariffs. Investors are growing more fond of Nvidia stock as the company continues to post impressive profit results and improve its technology, while many of the new tariffs are being suspended. Nvidia's stock is trading slightly above $150 as of this video, and the company is once again outperforming the market. Will it hit $200 before the year is out? The semiconductor processors required to power generative artificial intelligence, AI, or programs that think and generate, are manufactured by NVIDIA. Training and inference are the two fundamental steps in that process. In order to generate correct text and images, the large language models that process the data and provide output require a significant amount of power. These models train on millions of continuously updated data points and go through countless algorithms. That's made possible by NVIDIA's CPUs. NVIDIA's chips are in high demand because so many tech organizations now wish to apply generative AI in their operations. Depending on who you ask, NVIDIA has between 70% and 95% of the market, despite the existence of competitors. That's a significant advantage over the competition, even at the lowest end. The largest corporations, like Microsoft and Amazon, rely on NVIDIA as a partner since it is the industry standard. The biggest opportunity is found here. For example, Amazon offers a range of low-cost solutions for smaller businesses, but the big, well-known customers it serves require NVIDIA's potent CPUs. It is anticipated that demand will only rise. Over the next 5 years, the AI opportunity is predicted to rise at a compound annual growth rate of 26.6%, reaching $1 trillion, according to Statista. NVIDIA is probably going to get a significant amount of that. In order to entice customers, management is introducing new products that can manage larger data loads. The management intends to introduce a new line of chips under the Rubin name next year, and its Blackwell technology, which was introduced last year to replace the Hopper design, is already transferring into Blackwell Ultra. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Makes sense when you look at the chart.
Well, sure. I mean, as you said, Diane, we're up about 75% from those April lows, coming in near 86.62. From there, the price has had a strong rally, but you can see the trajectory has slowed a little bit here. We had our steeper blue trend line going across the lows. It's transitioned more to this white channel between our two dashed lines there, culminating with the highs here near 158.71. So now we are giving back a bit of the gains here. We are slipping back below these old highs, a double top here at our red line near about 153. That would be an important mark for the bulls to recover above and hold on to today. We can also see, though, that for a while during this kind of grind to the upside here, RSI was slowing down and showing bearish divergence. We can see that the price action was making new closing highs. RSI was trending downward here, and it didn't play out the way you would have thought it might if you were looking for a pullback here. We did actually get a spike up that broke through that trend line. So always important to use multiple indicators. Don't just make trading decisions based off of one piece of information here, because false signals can happen. And this isn't a crystal ball. It's not predicting the future. It's just showing you, hey, momentum was slowing down here. Now, if we were to assess our standard deviation channels and volume profile study, we can see here price pretty much topped out at that +2 standard deviation channel, marking a relatively extreme move to the upside from our blue linear regression line, our line of best fit there. So that would be a potential boundary to watch near 159, 158 or so. As I said as well, 153 marked to hold to the downside for important support. Beyond that, our +1 standard deviation channel and our yellow 21-day exponential moving average are fairly close together near about 145, 146.
Okay, Joe, I'm going to send it back to you. Any final thoughts on NVIDIA before we move on to your next trade?
Yeah, finally, the trade I'm looking at, it's a poor man's covered call. It's a DC 155 strike, December 2026 200 strike. So going to be in the name all the way up from 155 to 200 for 2026. Laying out less cash, of course, today while I wait for that trade. So it's just a cheaper way for me to get into the name. If we pull back, I'm going to be a lot better off than.
Despite significant setbacks, Nvidia continues to generate outstanding performance in the near term. Progress in that market is hampered by U.S. rules that prevent it from shipping its best chips to China. Additionally, Nvidia's earnings in the fiscal 2026 first quarter, ended April 27th, were negatively impacted by a charge for orders it was unable to fulfill. However, the results for the first quarter were exceptional. Earnings per share, EPS, including the one-time charge, increased from $0.60 to $0.76 this year, a 69% year-over-year gain. According to management's guidance, growth will slow down in the second quarter, but still be robust at a 50% annual gain. EPS of $1 is what Wall Street is aiming for, up from $1.68 the previous year. Wall Street anticipates $200 billion in revenue and $4.29 in EPS for the entire year, up from $130 billion, a 54% increase, and $2.99, a 43% increase, respectively, from the previous year. Nvidia's stock will increase in tandem with its earnings if the valuation stays the same. It will hit $212 if it increases 54% from its starting point this year. It will hit $197 if it increases by 43%. By the end of the year, Nvidia's stock should be above $200 if not much changes, and the company satisfies Wall Street's expectations. But Nvidia frequently exceeds expectations. It might grow even higher if that occurs. Additionally, high-growth equities may be valued higher. The price may increase more if Nvidia's valuation increases. Nvidia's stock is currently trading at a price-to-sales ratio of 26 and a price-to-earnings ratio of 50. Although those figures aren't low, they make sense given Nvidia's expansion. Before the year ends, it is likely that Nvidia will reach at least $200, which would be 27% more than the price at the time of this video. About 90% of AI accelerator sales currently go to Nvidia, and analysts predict that the company will continue to dominate the market for some time to come, even in the face of competition from AMD and Broadcom. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Certainly some flows came through at the top of the hour on the back of some comments out of the president. A little bit more hawkish on the trade front, maybe all-time highs, given a little bit more confidence to the administration. What do you make of those headlines and where it shapes us up now with about 30 minutes left in the day?
Yeah, Alex, if you kind of look at the last couple of trading sessions, especially for Friday, these comments around trade policy and potentially holding off on having discussions with certain countries, we have seen intraday reactions, but they haven't really been able to hold. And that's exactly what we are seeing right now. We're still trading at around that 6,200 level, even though we might see a delay when it comes to this trade deal. Now, it does appear that the administration is really trying to put the majority of its weight, it sounds like, on India, and hopefully a trade deal can actually come to fruition there. But once again, we saw a little bit of intraday chop, but nothing that was too that we weren't able to kind of recover from at this point here. Going into the close, what I'm looking at is 62.10 to 62.15 to the upside is going to be your area of resistance. Today, once again, another large volume day on the S&P 500 index options. We have around 5 contracts right now that have over 100,000 contracts being shared per strike, and it seems like we're probably going to get to maybe 6 contracts. That's a lot of options, to say the least here, and all of those are really sitting right there at around that 62.10, 62.15-ish area. To the downside, 61.85, if we're able to hold that guardrail, I think that would be a win for the bulls today, given the makeup that we have, and you're kind of looking at some pen risk sitting at around 6,200. So, Alex, I think the biggest risk going into this close here today is twofold. One is going to be, does the mega cap names really kind of hold up going into the close? We know that they have been weak for the most part. If you look at the MAGS index, if you will, down about 1% so far on today's session, but you do have broader participation in the rest of the market, close to around 90%, around 85, 90% of the stocks in the S&P 500 to the upside so far. That's the other big risk that you have going into the close. Do you have some sellers into some of those other sectors or indexes taking some of these profits? Because we have seen some outsized gains for companies and stocks that usually don't perform in the manner that they are today. So I think there's a little bit more downside risk going into the close, more of a risk of a larger market on close order to the sell side than what we probably would normally see going into the close here. And hopefully we're able to at least hold up that 61.85 level.
In addition, Nvidia leads the market for networking equipment that supports workloads, including generative AI. The business has added 2 significant clients, Meta Platforms and Alphabet's Google Cloud. Both will install the Nvidia Spectrum-X Ethernet networking infrastructure in their data centers. Additionally, the company's software and services division is growing. Nvidia's first quarter financial results exceeded both top and bottom line projections. The strong demand for AI infrastructure caused revenue to rise 69% to $44 billion, while non-GAAP net income jumped 33% to $0.81 per diluted share. Crucially, if it weren't for new export limitations on chips pertaining to its China business, revenues would have grown faster. Wall Street projects that during the fiscal year that ends in January 2027, Nvidia's adjusted earnings will grow at a rate of 41% each year. As a result, the current 50 times adjusted earnings value appears to be fair. Additionally, Nvidia's market value might reach $5 trillion in the upcoming year if its earnings actually grow at a rate of 41% each year, while its price-to-earnings multiple drops to 46. At its current pricing, patient investors ought to feel at ease purchasing Nvidia. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.